The weekly market update for the 27th of March 2013. I have got the man here with me to give the report. So sharing in this today is Tim Lawless, the Senior Analyst for RP Data. Tim, what's happening with the market?
Well, I'll start internationally. Pretty big picture. We're starting to see recoveries in the housing market in the US, which is pretty important. New Zealand's going very strong. The Canadian market's a little bit weak. UK market's improving. Locally here in Australia, our capital cities are starting to recover now after values decline by a bit more than 7%. So from peak to trough, we saw values fall by a bit more than 7%, but now we're starting to see values rise. And so far from beginning of June through to the end of February, they're up by about 2.5%, and 2013 is looking pretty strong. Locally here in Adelaide, we aren't seeing as strong conditions. The market is slowly recovering, more at the top end of the top middle end of the marketplace than anything else. Transaction volumes have stabilised fairly low, looking at around an annualised rate of about 20,000 sales year on year.
Tim, do you think we've bottomed?
I think the market's bottomed out. You're going to see some volatility from here. When you look at the RP Data Rismark indices and you draw a bit of a line through any of the volatility in the index for Adelaide, the trend is clearly upwards. We've already seen a year-on-year growth figure 1 month ago. The February figure year-on-year fell slightly into the negative. I think we'll see a bit of that from month to month here onwards, but yeah, the market is clearly showing some signs of recovery.
Without any parochialism, where would you buy in Australia?
I like Perth at the moment. If I'm looking to make some bucks out of residential property at the moment, Perth is certainly on a really strong upswing at the moment. Brisbane also has been through a very big recovery, and we're starting to see better conditions coming to the marketplace. From an affordability perspective, Adelaide has it in spades. So the most affordable mainland capital city, the beautiful city, this is certainly a place where you can buy some very cheap housing very close to the city.
Tim, rental market?
Rental market's pretty strong. Nationally speaking, we're seeing rents rise by around about 3.5% year on year. Adelaide, once again, doesn't have that same level of really high rental demand or tightness of vacancy. We're still seeing rents rise, though, to the tune of about 1.5% to 2% year on year.
So you're an investor and you could go shares or property. Which would you go at the moment?
I'd probably diversify as much as I can. Shares are looking pretty good at the moment, though. We're seeing a bit of momentum in the equities market. Keeping in mind when you're buying a property as well, pretty big ticket items. So you're looking at spending 300,000 plus generally. So it's a pretty big decision, whereas you can go to the share market and spend 20, 50, 100,000 quite easily. But I think long term, property is still a very good investment option. Short term, if you really want to make a short term capital gain, the share market's looking pretty good.
In Brisbane, you're feeling very comfortable. It's tomorrow night. Everything, 3 or 4 reds. Best friend says, "Look, I'm going to buy a property in Adelaide." Is he mad, or is he okay?
He's okay. You know, as long as he's got a job, he can pay, make the repayments. As long as he's got buying into a marketplace where there's strong tenancy demand, I think that's a pretty sound decision.
And one other question that comes out of a property council function, seminar that I went to, where the analysts love Adelaide because it's just so consistent, no highs, no lows,
Absolutely.
Just consistent. Would you agree with that?
It is a very stable market here, particularly in transaction volumes. I did mention the market's running a little bit below average at the moment, about 14% below the 5-year average, but you simply don't see those big peaks and troughs in a market like Adelaide, which, for some investors, that's not what they're seeking, but for a lot of buyers and a lot of owners, consistency in the marketplace is certainly a very positive thing.
And finally, those that own property, lock-in rates at the moment. What's your analysis of interest rates, just the short version?
Yeah, interest rates are probably bottoming out, or very close to bottoming out. We're already seeing fixed rates start to rise. So if it was me, I'll be fixing at the moment before the fixed rates start to rise any further.
And when do you expect the rise in the variable rates? Give me a date.
I don't think the variable rates are going to rise for a long time. We might see one further cash rate drop during this year, but that doesn't mean variable rates are going to rise anytime soon, that's for sure.
Thanks heaps, Tim.
Pleasure.
That wraps up our weekly market update.